Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss trends and developments impacting semiconductor industry fundamentals. Mark, it's great to see you as always. Welcome back to Trade Talks. And certainly semiconductors, a space that has gotten a lot of attention through the pandemic. So let's talk about semi performance versus its benchmark.
Yeah, thanks, Jill. Great to be back with you. And obviously, semis have been a very, very relevant topic over the past couple of years. As you mentioned, with the pandemic, there was a lot of increased demand, right, for especially a lot of the consumer electronics, things like computers, gaming systems, iPhones that, work from home, play from home, all that stuff really kind of turbocharged. And we saw this sector explode for a couple of years. This year, along with a lot of the rest of large cap tech, has been a much more challenging year. What you're seeing here in terms of year-to-date performance, I'm showing you the three semiconductor indexes, the main ones that we have at Nasdaq here, GSOX being global semis, 80 companies, 80 largest companies around the world. And then SOX is the flagship that we've had for almost 30 years. That's the Philex Semiconductor index that tracks the 30 largest US listed names only. Those two are market cap weighted. And then you've got eSOX, which is a recent addition, which is an equal weighted version of SOX. So same 30 US listed companies, just rebalanced on a regular basis and equally weighted. So all three of those you can see year to date pretty tightly clustered together, around 30% down, which is just about what the Nasdaq 100 NDX has done as well. Underperforming the SPX, the S&P 500 pretty materially there. But if you look at what's happened this quarter, you're seeing a bit of a divergence in 4Q where all these semis indexes are up between 15 to 19%, whereas the Nasdaq 100 is up only about 5% and SPX is up only 10. So seeing some recent outperformance, and I think parts of the market are starting to understand that, this is not a homogeneous space. There are some companies here that are doing better than others. And some may have gotten a little bit unfairly punished over the year-to-date corrections that we've been seeing.
Yeah, and it's so interesting, Mark. If we take a look at the next chart showing performance from 2008, you can kind of see it was somewhat hum-hoing along, not really too busy within the space. And then, around 2016, 2017, as semiconductors have become ubiquitous in all of the goods that we own, you can really see the movement there.
Yeah, absolutely. And you've hit it on the head. I think mid-decade is when people started to realize the massive growth potential of this space, especially for names like AMD and NVIDIA. Where, it's not just computers, right? It's not just mobile phones. It's things like cars, automotive entertainment systems, automotive driving, assisted driving systems, things like autonomous driving. You had the explosion of crypto. Crypto ended up being a huge source of gaming chip demand to do things like crypto mining. We're seeing that cool off this year. And then you've got the overall kind of automation trends within industrial, within buildings, very, very relevant kind of within green energy and green tech, having semiconductors kind of measuring, right? Power output, power needs, automatic sensors to turn on and off. So, you look at the underperformance this year, obviously it's been a bit disappointing, but when you zoom out and you go back to mid-2008, that's the earliest date of the eSOX index that we have a back-tested history of. These products are still up, 500-600% since then, more than doubling, in some cases tripling what the broader market with the S&P 500 has done, even with the underperformance this year. So still a very, very long run winner here in terms of an industry.
And if we break down GSOX a bit more and take a look at the top 20 constituent performance year over year, what can you tell us there?
Yeah, so the thing obviously that sticks out here, right, if you look at the purple bars, that's 2022 year to date. All the names here are negative, and pretty much all the names in the prior 2 years were positive. Intel was one of the few exceptions here. And what I've circled are a couple examples of names this year that have really outperformed. Texas Instruments down 8.5%, analog devices down just under 10%, quite a bit of outperformance versus the broader indexes being down around 30%. When you look at a name like analog devices, right, these are analog chips that convert things that they measure like sound and pressure. into electronic signals and are really, really key again for that automotive space as well as the industrial space. Autos in their most recent earnings report were up 49% year over year in terms of revenue, industrial up 40%. Consumer, their smallest segment, up only 19%. So obviously the consumer bit is where names like NVIDIA that are kind of very exposed to gaming being down around 50% for them in their latest earnings. That's where the pain has been most concentrated because, again, people really loaded up on those gaming and computing and phone devices during the pandemic. We've seen a broad shift in spending from goods more to services as we've gotten out of the pandemic. And I would expect things to kind of normalize next year, right? And so this is kind of an opportunity for investors to pick through the sector and see, look, there's actually a lot of opportunity from an index perspective because a lot of these names trade together and some of them, may have been a little bit unfairly punished given what's happened with the rest of tech.
And finally, Mark, let's take a look at revenue category spending.
Yeah, so this kind of shows you, the highest level picture that we have in terms of industry revenue growth since 2009, when we were about 200 billion globally for the industry. Last year, we got to almost 600 billion. We're still expected to grow this year. I think around in the high single digits. We'll see how the rest of the year shapes up. But, you can see here the two biggest segments of demand for semis remain wireless communication and computing, but the rest of these, consumer, industrial, automotive, they are growing very, very rapidly. They're going to continue to grow rapidly as autos become more and more focused on things like electric power sources and autonomous driving as we move to things like smart buildings and the kind of green tech, clean energy revolution gets a hold. I think the biggest factors that are affecting the industry right now, we have the Inflation Reduction Act passed. We also have the CHIPS bill passed that is really going to turbocharge semiconductor CapEx spending in the US over the coming years. And you also have that China bill kind of restricting what companies can sell into the Chinese market because of national security and defense concerns here in the US. Those are big, big ticket headlines that I think are going to take several years to really play out in terms of the impact on the space. Who were some of the winners and who were some of the losers from how much they're exposed to that regulation and that legislation. But overall, this is still a very, very high growth space, even with, maybe a 1 or 2 year pause on the consumer side. There's still a lot of pent up demand to get everything, connected to the internet and automated going forward. So very, very exciting space to continue paying attention to. And we have these 3 indexes that you can track very easily to see what's going on.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.